Good morning, everyone, and welcome to our market analysis focusing on the American markets, specifically the futures on the Standard & Poor's indices, the S&P 500 and NASDAQ 100 futures. As we saw yesterday, these markets continue to rise significantly and assertively. They show virtually no signs of declining. Hint of a downturn is immediately, let's say, halted, and the market is quickly pushed back up. Since the beginning of the week, the Nasdaq has gained 1,200 points almost without interruption. We are approaching all-time highs. If you look at the continuous futures, the synthetic has an all-time high of about 22,865. So there's really very little left, just about 100 points to reach new all-time highs. So today there will be some truly important data coming out, specifically significant macroeconomic data, and probably the market might very well use this incoming crucial macro data, who knows for sure, to actually reach these impressive new all-time highs. The important data is the inflation figure, the PCE price index, both year over year expected at 2.3%, with the previous reading at 2.1%. Also, the US consumer spending month over month, which is expected at 0.1%, so unchanged compared to last month. ATIS is at 2:30 p.m. European time, 8:30 a.m. US time. Let's also remember that at 4 p.m. European time, there will be the University of Michigan sentiment, another important indicator. The last recorded sentiment reading was positive because it managed to rebound. The previous figure was 60.5, and the forecast was also 60.5. So we'll see how these data turn out and how they will influence the market. Now let's take a look from a graphical perspective at what the volumes are telling us. But it's worth noting that the market keeps moving forward. So we can't even look at or establish previous levels that could give us any indications because it's basically a never bullish market that never pulls back. Anyway, let's take a look at how things stand from a graphical point of view. From a graphical perspective, as we can see, the Nasdaq is now very, very close to its all-time highs and is moving. Here it is, extremely close to those all-time highs. Here it is. This is the weekly candlestick of the all-time high. We're now at 7,733. It reached a high of about 7,560 this morning. So there's really very, very little left. So the incoming macroeconomic data could really give it that push, that momentum to actually break through the all-time highs. From a distribution standpoint, even today we're in a multi-distribution phase. We can already see that the market opened with a gap up because yesterday evening's close was around 22,670, more or less, right here, okay? And we see that today the market has once again created a multi-distribution. So it opened here, managed to break through the 700 area, and is strongly accepting the 720 area, even though I have to say that for now the 750 area has been rejected a few times. But we're really so close, 750, 735, that let's say I see it more in terms of distribution, okay? It's distributing between 750 and 720. In fact, now it has bounced again from 720 and is heading back toward the 750 area. So I see it less as a rejection and more as a physiological movement between the upper part of the range, which is 750, and the lower part of the range around 720. Basically, right now it's moving between 750 and 730. So I see it more as a natural movement due to the current distribution rather than a real rejection of the 750 area. So we can see that the Nasdaq immediately created a multi-distribution this morning, and obviously the S&P did as well. Here it is. The S&P is already in multi-distribution too. So we're already in a bullish situation during the European session. So we absolutely have to wait for the macroeconomic data to see how the market will react. And at that point, if the data gives the market enough strength, it might break through everything and reach new all-time highs. At that point, we'll find ourselves in uncharted territory because, as you can see, we don't have any kind of reference points. We don't have any levels. So from there on, we know the market could keep pushing. we're in uncharted territory, so it could keep pushing and we won't know how far because we won't have any more reference levels to act as warning levels, basically. So be very, very careful, because if today with the macroeconomic data, the market were to break through the high shoe, the all-time highs, this could, I mean, it's a problem if you go against the trend, because obviously you don't have, well, it's always a problem to go against the trend. It's always an issue. But even more so, if you don't have any reference levels, it becomes an even bigger problem. So that's as far as the Nasdaq is concerned. As for the S&P, it's interesting to see how throughout the entire day yesterday, the market basically tried to short in some way, in the sense that the bid was attacked several times. But as you can see here from our indicator, despite the aggression, the market practically rose through absorption. There was aggression, but the market kept adding liquidity to the bid higher and higher each time. The first level to keep an eye on is definitely where we have this area from the vol analyzer, around 6,185, 6,184, okay? This is the first area. Yesterday's close, MMH, I saw it myself, and it happened as a rejection of the highs, okay? But just like the other night as well, here it is, okay? So even the other night, it closed as a rejection of the highs. Last night, same close with rejection of the highs, and this morning it's moving upward. So the pattern doesn't change. It always stays the same. A market that keeps moving upward. By now, the S&P as well has been rising for almost 2 months straight, practically without interruption, and that's how it is. From a technical standpoint, here it is. The S&P has also reached the area we had, let's say, highlighted, hitting a high today of about 6,214 to 6,215. So at the moment, it's right in the area, let's say, to watch closely. With the macro data, the S&P too could obviously push up to 6,250 and reach that level. You can see the difference between the Nasdaq and the S&P. Obviously, the Nasdaq is already right up against its all-time high, so it's ready to break through them. If the Nasdaq breaks its all-time highs, that would bring the S&P to. We're always talking about the synthetic future here, okay? So it's a future that is, let's say, constantly renormalized based on the new expiration. So this is the synthetic future. In the synthetic future, in fact, we can see how the S&P still has some areas above as resistance areas of resistance and caution, where it could, let's say, bounce back down. So 6,250, 6,283, the area we highlighted yesterday, 686, 6,207, it reached it, and here we are. So all that's left now is to wait for the data that will be released in the early afternoon and see how the market reacts, to understand if these macroeconomic data that will come out will have, let's say, the characteristics to allow the Nasdaq and also the S&P to move further forward. So be very, very careful. You understand, if we break through the all-time highs, the market, well, we no longer have any reference levels. And usually when we break through all-time highs, the market tends to run. I mean, it tends to really take off. So pay close attention, because we are in a full-blown bull market. I'll also give you my personal, let's say, view on the matter. Be careful if the market starts to drop and goes looking for lows for retracements to buy, because it's true that in a bull market there's that saying, buy the dip, and that's absolutely true, okay? But the market has already completed a good part of its upward movement and probably needs to take a breather right now. So if a downturn should start, be careful about looking to buy on pullbacks or retracements, because that could be very risky. It could potentially be quite risky because the financial market could, of course, move very, very quickly, breaking through one level after another and then retracing quite significantly, perhaps even dramatically. So be careful. This is a personal piece of advice. If the market starts to retrace, be cautious about buying on those retracements. You need to be very, very sure about the levels and the volume evidence that appears at those moments, so you can be certain and have proof that it's worth making the attempt, that your stop is well defined and your target too, but above all, your stop. Don't average down. Don't try to ignore your stop, because if the market keeps moving downward, you can really get hurt badly. So after this advice, I want to say goodbye to all of you, wish you a good day, and maybe this afternoon we'll catch up with the incoming data. Best regards.